Good morning from the For the See Me. This is Chris Robinson with your Traders Exclusive comment today. Here Wednesday, there's 3 days left to go in the month of July. We're going to concentrate mostly on the grains today, corn, wheat, and beans. After having a tremendous sell-off in soybeans, November beans seems to have caught a bid around the 665 level. Today we were within a dime of $10. That $10 is a big psychological level in November beans. I would continue to watch that. The market very oversold after losing over $2 in the past 6 weeks. We're trading off the weather. We did have a little bit of Chinese business and some thoughts that they were going to be coming in and actually buying more soybeans. At the end of the day, I think if you're a country with over 1 billion people and 300 million hogs, you've got to always be looking when the foodstuffs are on sale. And the type of correction that we've had in November beans has put the grain on sale. We basically the contract lost 20% of its value in about a month and a half. That's a tremendous loss to the producers in the United States if they did no hedging. We grow a 4 billion bushel crop. A $2 break on a 4 billion bushel crop is $8 billion. Switch over to the same thing in corn. We'd had over a dollar sell-off in corn after December corn was not able to take out 450. We traded it on to 334. 350 might be an area where we get some more interest if we were able to move above it. It all depends on the weather. We'll probably close out the month here going into the week. Sunday night when we get the new weather forecast, we could be 20, 30 higher or 20, 30 lower in the soybeans. The corn market is pretty much made at this point. We are going to be watching the heat index though for the beans. The beans are made in August. I think if we get through the middle of August without any more weather issues, or if we get one good solid rain, that'll kind of put the nail in the coffin for the beans. But however, there's still a good opportunity to catch a bounce back in soybeans. Finally, switching over to the wheat, we're still bouncing off 10-year lows. We've seen a little bit of export interest coming towards the U.S. because of the quality issues in France. That may be an underpinning here moving forward. Again, when you're trying to pick a bottom, it's very dangerous. It's like trying to catch a falling knife. If you do try and step in here, make sure that you've got sell stops underneath your buys so you don't walk into a debacle, walk into putting your hand into a blender where you buy it, it breaks 10 cents, you buy it, it breaks 10 more cents, then you've got a real problem on your hands. So if you're disciplined, I think you've got a chance at catching some rallies here in the grains. However, if you lose discipline, these markets move so quickly that they can run you over. And if you're a trader or speculator, the number one thing is to preserve your capital and have an exit plan before you get into the trade. If you're a hedger, that's a whole different story. Make sure that you're managing your downside risk. Also, especially for wheat producers, if you're selling wheat here across the scales, you need to re-own it. A lot of guys, you've got to do the math problem. If they're going to charge you 2, 3, 4 cents a month to store the wheat, you might be better off selling it and re-owning it for 2, 3, 4 cents out through March of next year. Then you've got your risk on paper, you've got your bins cleaned out, and you can look forward to what the market's offering in the next 7 months. That's really about it. From the For the See Me, this is Chris Robinson. If you're looking for help with your trading, hedging, speculating, look me up on the web, Chris Robinson.